With an aim to ignite a worldwide social movement, the United Way of Chennai, part of the United Way Worldwide Group, is back with the 2015 edition of Budgets and Markets, Hype, Hope and Reality.
United Way of Chennai has made a significant impact to the cause of underprivileged in terms of education, healthcare and livelihood, thanks to the support of various institutions and individuals. And we have gone about it in a very, very methodical and clinical way as a most efficient charity organization.
Aspiring to find a socially impactful side to the fresh new budget, the event saw the likes of some of the most renowned Indian economists, market experts and high-ranking officials of some of the top organizations in India. Lighting up the mood was leading economist C. Rangarajan, who shared his valuable insights about the current structure of the economy.
Until about 3 weeks ago, we were all thinking that 2013-14 was a bad year, when the economy hardly grew, and it was less than 5%. Suddenly we are now told we grew actually at 6.5%. And for the current year, it is estimated that the Indian economy is growing at the rate of 7.5%. One is investment, and the other is the productivity of capital. The two together determine the rate at which the economy grows. If, for example, the economy invests, let us say, 36% of the GDP, and if the incremental capital output ratio, which is really the efficiency of capital, is 4:1, then the economy will grow at 9%, 36 divided by 4. Therefore, one needs to look at both the level of investment and the efficiency with which the capital is used. In fact, one of the concerns in the earlier period, with the earlier numbers, was that the decline in the output growth was stronger than the decline in the investment rate, indicating thereby a decrease in the efficiency in the use of capital.
Addressing key social factors in lieu of the 2015 budget, a panel discussion featuring intellectual experts and financiers from different organizations was organized primarily to break the budget from a social point of view. The panel featured Ramesh Damani, member Bombay Stock Exchange, Nilesh Shah, Managing Director Kotak Asset Management, and Milind Barve, Managing Director HDFC Asset Management.
Nilesh, let me just start with you. The common consensus that this was a bold but not a brave budget. What do you say?
I think this budget is very, very bold, and people will appreciate it probably a little later rather than today. This is the first budget where revenues are underestimated and expenditure is fully provided for. Anyone who is saying that this budget is not bold, please give me one incidence of a budget in recent time, in last 10 years, where hand on heart he can say that the numbers were credible then. Second, I'll recommend all of you to go to cnbcawas.com and pick up a book called Big Budget Ideas. This was the show which was done where industry participants, the disclosure is that I was also one of them, we presented certain ideas to the government, and majority of them have been accepted in the budget. The first idea was Permanent Establishment Act. Why are offshore fund managers managing out of India and not inside India? This budget is a bold step to make Mumbai, Hong Kong or Singapore. The public sector banks, we all know they are inadequately capitalized. The idea was to present, can we create non-voting shares? Can we create differential voting shares? In this budget, Holdco has come. We all know that India actually is a net exporter of capital. The amount of gold, silver, diamond and pearl which we have imported over the last 5 years, which is our payment to the world, is more than FI and FDI received. The gold lending scheme and gold bond scheme, both were presented to the government in that. If you look at multiplier effect of leverage, I mean, all over the world, government contributes little by way of equity, raises multifold by way of debt, and then creates a multiplier effect in economy. The NIIF, maybe it's rebranded as NIIF, but that whole idea of creating multiplier effect was there. So there are lots of things which budgeters listen to the market, and maybe I am a bit biased because it's something which we wanted to see and is there in the budget. But I think the budget is really, really bold. It has taken ball of string approach. There are lots of things which has happened, and the budget is credible.
Well, let me ask you, markets pre-budget kept talking about big bang reforms. And then if you look at the subsidy structure, very little was changed. So what is your take on it? Did you see the big bang? And what is the big bang that the market really wants? What are the top 3 big bang items that the market's looking for?
What is a budget supposed to be? It's like a business plan for the next year. If I were to present my business plan for the next year to my board, I'm sure my chairman of the board doesn't ask me whether it was bold or not. So quite honestly, I'm not at all in the camp that ever expected big bangs. This one sort of policy statement, yes, it is an important statement. It tells you the financial numbers for the next year. It gives you a peep into where directionally the government wants to go. But how much can you move in 1 year? So how much of a big bang can you bring in a fairly sort of tough and fairly docile kind of a financial statement? But coming to, did I get what I expect? I think I'm more than happy to see that directionally we are right. There is a lot of conservatism in the numbers. They look achievable, looks directionally right. A lot in terms of final delivery will come in the form of execution. And I think none of the earlier budgets were lacking in policy clarity. It always boiled down to execution, execution, execution. And execution is something that will unfold in the next 12 months. So I think we'll be judgmental about this budget when we look at the revised budget estimates of the next budget. That's the time to take a call on whether this budget really outlined it well.
Let me get to the big bang stuff that I think, and I want your comments on that. The big bang that sometimes the market wants is labor reform. That is the right to hire and fire. They would actually like the PSUs to be sold. There's no reason to keep MTNL, BSNL, Bharat Hotels in the government fold, for example. And opening up an FDI in various sectors on a more rapid basis. Would you think that those are the challenges that the government still has to meet?
No, certainly. What they've done is they've rationalized FDI and FIS to be within the common calculation. A lot of things which are on the legislative agenda need to see whether they will pass. So that's obviously a litmus test. I think in terms of the other things you mentioned, time will tell. I don't think we need to get very judgmental. As I said before, some of the things you mentioned are not necessarily a part of the financial statement framework. So those can be done. Labor reforms and passing of insurance bill, if that's an example, they are still work in progress. They're outside the framework of the budget. So there's reason to feel that we will progress on that. So I wasn't looking for much on that in the budget, to be honest.
Okay.
Now, FDI, can I come in?
Yeah.
And I want to ask a question. You show me one country where the largest market cap bank is majority owned by foreigners. In India, HDFC Bank, which is the largest market cap bank, is majority owned by foreigners. How more open can a country be? Second, Vodafone PLC, in their balance sheet, discloses 100% ownership of Vodafone India in economic terms, whereas our telecom policy states that you can't own more than 74%. Which country is more open than this in FDI? In insurance, we all know what is the cap. We all know the structure which is there even in listed companies. Isn't that more opening up? I think Indians should know how to market themselves. We are more open than probably any other country in the world in accepting foreign direct investment, in accepting foreign portfolio investment. It's just that we need to probably do better marketing of ourselves.
91 was a benchmark budget by Manmohan Singh. 96 was Chidambaram. Some people call Yashwant Sinha's budget. Which budget was your favorite and why? in
So
all
I
these
think
years?
in 91 I didn't really have the maturity to understand the budget. But definitely 96-97 was the period where we had seen the Asian crisis kind of situation, and then the budget came. And that really probably laid the base for rest of the days to come. And that was a real bold budget. I think all credit should go to 96-97 budget, which ensured that today we are standing on this panel.
True. After 91-92 was a pretty dream. How about you, Milan? What was your thought?
The really budget that kind of made that whole occasion important was really the 91. But that was because we were at a cusp of a serious crisis. I mean, that was a completely different situation, needed a different response, and I think that was more than delivered. Even today when we talk of reforms, we talk about the 1991 reforms and so on. So I think after that, each budget has sometimes done, there were some years in which it was called as the dream budget, but essentially we need to come to see the dream growth rate that we're looking for, and not the dream budget. So I would always underplay budget sort of as an announcement or the stage to sort of set the tone. But if you were to push me to picking a particular budget, it would probably be the 91.
91 budget. Great. From your analysis, Nilesh, I understand that the financial sector is going to do well because of so many managers can come here, interest rates are going to go down. Specifically on this budget, are there any sectors that you feel will stand out as winners because of what the government has done?
This sector is small, but it will do phenomenally well. And it's the most hated sector. Generally, what is most hated tries to or ends up giving maximum return. So this is the construction sector. There are only two kinds of companies left in construction sector, one which is going into bankruptcy and one which doesn't have debt. So bidding for construction contracts is now reverse side, where the government contracts, the government has to tell that they give order based on minimum 3 bidders. And in most of the cases now there are only 2 bidders, so they have to create 1 bidder so that the tender can be awarded. This year we are spending 40,000 crore extra in roads, which means we'll end up building about 10,000 kilometers of road, including the state's allocation, which is last year 4,000 kilometers, so 2.5 times jump. So one, there is volume growth. Second, there is less competition. And third, valuations are reasonably low. Put all these things together, construction sector can give a surprise.
Yeah. Milan, what about you? Specifically this budget, do you find gleam for, say, the real estate sector?
I don't want to comment specifically on real estate sector because it's not a very homogeneous sector. There are some strong, high-quality companies, and there are some whom you can barely understand. This sector, sometimes, to my mind, lends itself more for a private equity type investing than listed equity. That said, from an investor's point of view, Ramesh, there are a lot of technicalities about what will happen and what's the good sector and are you bullish or not bullish. You just heard that our household sector is the only one that creates surplus. So what you have to really present to this household sector is what are your investment choices. And the first choice you have to make is between debt and equity. Now, if you believe that real interest rates on debt are going to be 1.5 to 2.5, so essentially in debt you're going to earn that 2.5% return net of inflation. And if you do it in a tax efficient manner, you'll earn it more efficiently. But equity as an asset class has the potential, because of the way the tax treatment is, the least that you can earn without going into the technicalities of P multiples and price to book, which I do agree with Nilesh with, you have the potential of earning close to 9-10% or more. I don't want to get predictive about returns, but I think as an asset class, equity stands out as a distinct winner in any case in the long term. So we are a clear advocates of putting medium to long term into equity as an asset class. Tactically, debt as an asset class in long duration might appear to be a smart move, and that's because of the unfolding interest rates scenario of probably interest rates you heard before also could surprise us by how much they can go down. And that is a huge opportunity if you're playing a long duration debt fund exposure. Otherwise, you need to put this large household surplus to use largely through equity.
let's move on to the budgets, to my favorite topic, which is bull markets. Nilesh, you mentioned earlier that you got in 91, 92. What is this bull market telling you?
So this bull market is combination of couple of things. One, globally India today looks far superior to other countries. So today in the world when you see, India appears bright. So one, we expect Gora flows to continue into the country. The second is the domestic flows. The under ownership of equity is striking. I mean, either Indians would like to remain poor or they'll become smart enough to invest in equity. And my guess is there are more smarter Indians than before. From a supply point of view, now market has become wiser.
But capture this bull market. Is this the technology bull market? Is this the liberalization bull market? What is this bull market? I want a headline.
This is the bull market of India. It's a rising tide, and every sector, every company will grow.
Milind, your take on this. What is this bull market telling us?
Ramesh, we keep analyzing and we keep burning the midnight oil to look at what all these economic triggers are. I would simply say that this bull market, to answer your question, is the bull market of the new government. People stop asking us about whether we should be buying into equity or debt after 15th of May 2014. Now they only want to know whether we should buy a large cap or a mid cap or it should be this theme or that theme. What we were talking about, the long-term merits about investing in equity, remained the same. It remained the same even earlier. But people are now responding to the fact that there is a real hope, because let's not try to beat around the bush. The key event that is creating the environment for this market is the change on 15th of May 2014. Make no mistake about that. Whether some numbers were getting better, the current account deficit was getting better even a little before that, oil may be even getting a little before that, we were beyond the tapering impact, but the real change happened. And the reason is very simple. The average man invests in equity, or his view on the market depends on what he reads on the front page of the newspaper and not the business page. And the more complicated we make it difficult for him to understand. And I think the language of communication that we think is resonating now is really the language of the change of the new government. If they seem to be a group of people who will deliver, that's what people are believing in, and that's what will make the change.
United Way Worldwide has played a significant role in connecting various sectors of the society to create a social change in order to ensure a more than healthy and financially stable lifestyle for individuals and families. Similarly, the United Way of Chennai has paved the way for bringing about a substantial social change by launching a variety of social-friendly programs. Aiming to bring about a radical change in the female infant mortality rate, the United Way of Chennai has joined hands with the Ekam Foundation in a bid to tackle the issue by increasing the nurses' workforce and training them to cater to the needs of women and infants.
This is one of the biggest projects that we have initiated from United Way of Chennai, getting into health. The issue of reducing the infant mortality rate and the maternal mortality rate across Tamil Nadu. What we are doing here with Ekam Foundation and United Way of Chennai, we are kind of training 200 nurses, mentor nurses, so that they could in turn train about 6,000 nurses across the state, so that there are millions of children, babies who are saved. The numbers are going to be reduced, and we are going to have a very stringent monitoring system where we can tell you in numbers after about a year after this whole training goes through. Can I call Dr. Sai onto the stage, please?
Proposing to factor the needs of the autistic and ensuring that they receive the utmost care and importance, the United Way of Chennai has also joined hands with Swabodhini Charitable Trust in a venture that can improve their physical and cerebral health.
The very nice thing about this project is that the autistic children are endlessly not with the institution, but we make sure that with institutions like Swabodhini, that we give them some hope in life, and these children are later placed in corporate sectors or in otherwise sectors to lead their lives and look after their families. Yes, Anuradha. And I have to introduce Anuradha to you. She's one of the trustees for this organization.